Have you ever looked at your bank statement and found yourself wondering about every single line item, perhaps seeing an unfamiliar entry? It is like a detailed financial story, but sometimes a few simple words can tell a much bigger tale, especially when it comes to unexpected charges that impact your balance. Understanding these specific entries is key to truly knowing where your money goes. When an overdraft charge appears on your statement, it typically shows up as a distinct line item labeled very clearly. You will often see terms like overdraft fee, OD fee, or sometimes a more general service charge overdraft. This entry will always include the exact date the fee was assessed, along with the precise amount charged, making it stand out from your regular transactions. This distinct labeling is absolutely crucial because it helps you immediately identify why your account balance might be unexpectedly lower. An overdraft fundamentally occurs when you initiate a transaction, like a debit card purchase or an automated bill payment, for an amount greater than what you currently have available in your checking account. When this happens, and your bank decides to cover the payment instead of declining it, they provide a temporary advance on your behalf. For this service, the bank then charges you an overdraft fee. The specifics of how and when these fees are applied can vary significantly based on your bank's individual policies and the type of overdraft protection you have opted into. For instance, if you have opted in for overdraft protection on everyday debit card transactions, your bank might approve a purchase even if it overdraws your account and then charge a fee. However, if you have not opted in, the bank is generally required to decline the transaction, preventing the fee entirely. It is also worth noting that some banks might process transactions in an order that could increase the number of overdrafts, for example, processing the largest transactions first. This can sometimes lead to multiple fees if you are not careful about your balance. Federal regulations requiring banks to obtain your explicit consent before they can charge you for overdrafts on typical debit card purchases and ATM withdrawals, providing an important layer of consumer protection. To proactively spot these charges and better manage your account, it is highly recommended to regularly review your bank statements. Whether you receive paper statements or access them digitally online, make it a habit to scrutinize the fees or service charges section. Look specifically for any debit entries that do not correspond to your usual purchases, bill payments, or cash withdrawals. Many banks offer convenient services like balance alerts, which can notify you via text or email if your account balance falls below a certain threshold or if an overdraft fee has been posted. Utilizing these tools can give you an early warning and help you take immediate action. It is important to know that while overdraft fee is common, other related charges might appear. For example, if you wrote a check for more money than you had, and your bank returned that check unpaid, you might see a non-sufficient funds, or NSF, fee on your statement. This fee is charged to you for the attempt to make a payment with insufficient funds. Conversely, if someone writes you a check that bounces because their account does not have enough money, your bank might charge you a returned item deposit fee because the funds you thought you received did not materialize. These distinctions are not just about semantics. They clarify the specific event that triggered the charge, helping you understand where to focus your financial attention and prevent similar occurrences in the future. Understanding the precise wording and placement of overdraft charges on your bank statement empowers you to be a more informed and proactive manager of your money. By quickly recognizing these specific entries and the circumstances that cause them, you can promptly address any issues, potentially dispute incorrect fees, and implement better strategies to maintain a healthy account balance. This knowledge is a valuable tool for avoiding future fees and securing your financial well-being.